Hello, everyone. Today is Monday, March 6, 2023. I had to do this video again because I made one additional trade that it didn't show up in the first video I was making. So I thought I was done for the day, but then I saw a new entry in Crude, as you see here in the chart. And so I'm including this one as well. Okay, so before we get started, let me remind you that until tomorrow, you do have the opportunity to get an 80% discount on Apex funding. The link for the promo, it's in the description of this video. So if you want to take advantage of that, you have only until tomorrow midnight to do that. So good luck, and hopefully you take it. If not, that's fine. The advantage of this, it's well known. You can trade with no risk, basically. Okay, so let's get started. I'm going to review a couple of trades I made today. Actually, there are 4 trades. 3 of them are in Crude, and the 3 of them were winners. 2 winners and 1 scratch, and then the other one was in gold, and that one was a loser. So I'm going to show you what I did and the mistake I made in gold as well. So I'm gonna review Crude first, and let's get started. Oh, I'm gonna before I start, let me highlight my cursor. There you go. So in that way, you can see what I'm pointing out. Okay, so crude oil. So morning started. I didn't do any trades in the morning. I was looking at this, down move, and then there was a trend reversal breakout right at the open. So you get lower highs and lower lows in a downtrend, and then you get this lower high and then a higher low, and then you get the higher high. Now I did not take it. Let me paint it. So in the case that you are not familiar with this, you know what I'm talking about. So you have lower lows and lower highs from here, right? So then you have a lower low, then a lower high, then a higher low, and then you get this push there, and so the entry is right there at this level right here. Okay, so right there is the entry. I did not take it. Why? I did not feel comfortable taking it just below the VWAP, and then also below the smooth 50, the 50 SMA of 50 SMA. So I did not take that one. It was profitable. At least you do have $200 on the first target right there. Then the market came back, and then if you see this one is an ideal trade. You get a bounce off of the moving average, which is the 34, and also bounce out of the cloud. You have the cloud right there, and then you have momentum moving to the upside. Now I exited right here for $20 profit right there. Why? Because I saw a higher high there. It was not completed, but I saw a higher high on the in there. It is actually marked as a double top, but this one is one tick above, and then was coming back down. In this one here, you do have a divergence. So it was making a lower high in the stochastic. A little bit premature for me, but anyways, I took the trade off, and I made only $20. So that is what I call an scratch trade. I did not take this one. This entry would have been okay, and also you have a breakout of the compression here. If you see that area there, you do have some compression, and then you have a breakout of it. I did not take that one. neither took this one here. In this case, the momentum lines were a little bit too high for me. It was a good trade though. I mean, a good setup. Momentum was bouncing off of that. It was kind of the limit. I lost the trade. I did not take that one. That one was a good profit. In here, I have something that it's a little bit more into my standard, I would say, if I can say standard, into my nice setup. So this one here, there were a couple of things that were a combination here. You do have this bounce off of the zero line on the moving on the fast line and slow line. So you're and then you're crossing. Also, there if you look at here, there is a previous high line, which is the previous day high. So it was crossing there. You see, if you notice, I did not take the trade in this candle, right? That one there. I took it in the second candle. Why? Just because it was not it was still below the previous high, and I decided to wait until it went through, and then if it came back down, then move it and stop it out. But it didn't. It continued moving, and so I sold this one right at that level when it was coming back, and that trade was for $340 on that move there. So 340, and then so the last trade I made was actually, I was making the video and saying, okay, I'm not gonna trade anymore and all of that. When I saw that crude came back down, up, down, and then came back up again, I was a little bit late because I should have entered the trade right there, but I didn't. So I took it right above it on that third candle, basically when the second one closed, and that one gave me another $200. So seems that crude is moving nicely to the upside still. If you see the 30 minutes right here, so you do have. I was actually looking at this and I thought, okay, this one is going to have a nice run today, and it actually did, but I missed all of these two entries here, and this could have been a very nice day for crude. It was okay. I made $560 in crude today in one contract. Okay, so here you go, and so total profit for today is let's see, $330 for contract. I'm trading two contracts in these three first, and then three in the second, third. So we do have a 2,970. So that is with that. And let me show you the mistake I made in crude. I mean in oil, in gold. And this one here was an early entry, and not a good idea when you have a choppy market. Look at this area here. I was expecting gold to come back to come down here because of the overnight price move. So you have a move to the downside right there, and then I was expecting something similar happen here. But in this area, there was a lot of choppiness, right? So you do see, I always point out all of these wicks that you see on top and the bottom. It shows you a lot of indecision in what the market was doing. So I did not make any trade in this area, but then I anticipated the break right there in that little candle, and I was and I kind of like, what I'm saying anticipated is because I traded above these two lows, and that was kind of like a mistake. So it went back up, and I lost $230 on that one. So the total was $330 per contract then. So $2,970 total. Okay, so that is what I did in here. So I saw this week out of the cloud, week out of the moving averages. Moving averages were coming down, but then it reversed and went back into the opening range, which is this two lines you see here, right? So that one there is the this one here is the opening range, right there and right there. And I was kind of, okay, it's breaking, and it did not break, went up there again, and then finally broke right here on that candle. And I did not take it. I mean, I was kind of like, okay, I did not get it. That's it. So nice move after that, after the break. Came back down after the break of that range, and probably the best way to mark this range then afterwards is it's always easier to talk about it afterwards, right? So it should have probably been that to mark the break right there. My break, I'm gonna change the color here. So my range area was defined in here actually. Yeah, but it was not actually. It was better on these two bottoms there. The upper side is fine, but the lower side I should have considered these two bottoms there for the break in this area right here. All right, so thank you so much for watching, and hope this one is helpful for you. Thank you. See you next time.